My name is Paul Sampson, and welcome back to Data Dash on this Monday, June 23rd, 2025. Bitcoin and the broader market continue to pull back here, and we're seeing similar weakness across the traditional equities as well. What's adding fuel to the fire here is that there is an escalation in the global conflict that unfolded over the weekend while the traditional markets were closed. And now the big question is, how will markets react as they reopen today? And more importantly, what can we anticipate from a macro perspective in the weeks and the months ahead? Let's dive into the charts and the data to make it all make sense. All right, at the time of recording this, Bitcoin is just breaking down below $100,000. We're trading around 99,000. It may be a little bit different by the time that this video is uploaded. And I want to cover a little bit of the more short-term outlook right here, and then we're going to take a look at the macro as well, right? These Monday uploads are really based around the macro outlooks. I did just want to hammer in a little bit on the more current price action that is truly very technical here at the moment. I know that the news around this is obviously making it seem a little bit more uncertain, but I really want to point out the key regions that we are approaching here for Bitcoin. And more than likely, the news is going to be increasing as we get into these areas. As I always try to point out, that the news at the times of major reversals that occur are generally at extremes, right? We saw this back just as of recent, and we could take this back all the way into almost any time frame. And when we look back at the inauguration day where we basically topped out, the news was at extremes as far as bullish news would go, right? We had the crypto reserve, we had the brand new bullish administration, we had just everything pointing in the right direction for crypto. Nothing that pointed out, at least news wise at the time, that we'd see this here. Then we started to get some of the tariff woes. They continued down the road here. And then the tariff fears and uncertainty at that time were at extremes right here, right? So they kind of came in this region. They continued. And once price is beaten down so much, or vice versa, once it's pushed up so much and it just feels like it won't reverse, as well as with the news around it, that's generally when we do see those reversals occur. So I just want to kind of point that out. We're coming into some key regions here. There is a major bearish setup that we've been tracking for quite some time where the targets are just about 7% below us now. And this is how I'm going to be approaching the market as we come into this. In the Traders Club, I've been preparing everybody for the most common areas that we're going to be looking for the next bounces from, okay? And one of which was the lowest tier, was going to be just around these lows right here. The second of which is going to be this overall point of control, which is $97,000. And then the big one, of course, is going to be the area where I actually anticipate seeing a potential reversal here to where we can see that next leg higher, okay? It's not a guarantee by any means. We'll have to see the context around the market as we get there, but that has been the overall idea ever since we traded down around this region, targeting back to 112 to 114, and then overall, whether we got another push higher here or not, the ongoing thesis was that we'd push down into 88 to 93,000, and then see that potential projection for that next leg higher. Okay. Now, locally, I have that overall range point of control highlighted here. And all that is I'm just simply pulling a fixed range volume profile of the overall range that we've been trading in basically since November of 2024. All right. I'll go ahead and highlight this now for you. And taking everything the noise wise out of the picture here, this is just a simple range rotation. Okay. And what I mean by that is that we entered this region down here. Obviously, this is still basically being populated. So this is a dynamic range to some degree. So the value area will shift. So when I say dynamic, it's like a moving average, right? The new information daily will cause this to, shift slightly here and there. Obviously, big moves will cause it to shift as well. But for the most part, this range is pretty much set here in the majority of it, as far as I'm concerned. And we come up into these regions. There's been some short-term things that we've been paying attention for here. But overall, I'm looking at this point of control, which is the highest traded area of the chart in this region. And that's also where price action is going to seek out once it's within the range. Okay, so us being well back within this region, very likely to come back into this area. You'll also note that the bottom of the range, so not only did we rotate that range from the low to the high, we have potential now to just simply rotate it once again from high to low. And you'll note that that comes right into our $88,000 to $93,000 target area that we've been talking on and looking for that potential major reversal from, right? So in a little bit of a short-term idea, I would imagine we may see the next bounce come out of Bitcoin around that overall point of control, that 97, maybe $98,000 region. If you were looking at this specific area too as a potential A, B, and C correction, that would also be something that's quite likely to occur in this area as well. And the way that I would measure that, as far as like a perfect ABC would be to take a trend-based Fibonacci extension, take it from that high, take it down to our pivot point right here, bring it back up to our local high, that lower high that we put in right there. And you can see that the 1-to-1, it's just taking the exact measurement of this move right here and then projecting it from that high. Lines up with about 98.9, so 99,000, right? So realistically, we could consider this a little box overall, the point of control region into that $99,000 zone. And that's where I'd be looking for the next bounce potential here. And with the news and everything, how it kind of occurred over the weekend and the fear that enters the market, uncertainty, a lot of times we'll see where everybody's going to expect Monday to be a really big red day. And in turn, it actually ends up being quite the opposite, right? We saw the same thing months ago. So that is definitely a region that I'm paying attention for. But overall, the main thesis still does remain that even if we get a bounce around this region, that we will see lower prices to come around that 88,000 to 93. And that is all derived from the overall bearish setup that we've had in play now for the last month. We completed this 4-month bearish shark harmonic, which is a sequence of Fibonacci's, has a very set list of set ratios, has set targets, and one of which being this 0.5 Fibonacci retracement. So by no means is that just a guarantee that that's where we're going to see this come down and get a reversal off of. If we do start losing that region, we have to adjust to some degree. But so far, to me, I've been looking at this as an overall range that if I was trying to assume how we would break out of it, and it's just all it is at the moment, it's an assumption, but we're tracking this pretty closely. It was going to be that we'd see this move to the upside. We got it right at a time frame I was looking for, which is just a Fibonacci time that we can measure off of these harmonics to see when the completion zone may come in, so that we can just be aware, have a little bit more of an edge around this fact, right? Like this was an area where I was not getting overly bullish at, with the caution of this exact move kind of unfolding. And from here, I think we have pretty valid at this point. It's been valid for a hot minute. Was looking to see if we got maybe one last little push up, just because just the contrarian side of myself. When I looked at the last few weeks and just pretty much everybody's been targeting lower and all these things. And actually you can see a lot of shorts coming into the market as well. A lot of times they don't, when the majority is looking one way, it doesn't really occur that way. But in this case, we are seeing that pretty much unfold. So the overall thesis, once again, has remained that we'd see this bear setup. I think that we have a recipe here to come into this region, and this would be what is known as a 5-0. So you come down to the 0.5 Fibonacci, so the 50 spot basically. And from there, instead of continuing lower, you front run things like the gold pocket and things of that nature. Also, you would probably have some really, really nasty news around this region. And then in that case, we would see the 5-0 come in, and where you'd come in right here, it catch the reversal. And this is how I envision us actually breaking higher towards 120, 130. Maybe even more for Bitcoin. Now, pulling off the shark and just looking at the yearly open is one major piece that I've been looking to come back and potentially back test here as well, alongside the 0.5 shark target. Another piece of confluence down here around that $93,000 region is if we actually look at our EMAs here, this is where our 200-day EMA is coming in at right here. Okay, so we're losing our 50-day right now. Generally, we come between the two of them, we'll come down to that 200-day. It's simply just coming down into a major moving average of support. And once again, we'll be running through everything in the market at that time to kind of get a visual and an idea of a little bit more context at that point. But overall, that's a ton of support coming in this region. Once again, it's the 0.5 of our shark target. It's time-wise, it's on point, right? This was a 4-month-long pattern. I imagined it would take about 1 to 2 months to come down. It has now been 1 month today. Can get as low, really as 88,000, which is coming back to the B point of that region, back testing these highs right here. But at that level, we'd really want to see us get back above that yearly open relatively quick. And that's kind of going to be, once again, the overall region that I'm looking to. But it's the box of despair, because if we do lose that region, then I think that things shift very much heavily more so towards the downside. But until that occurs, that is the biggest area of support I'm looking to. The overall game plan essentially has been something along these lines. Obviously, I've been trying to manage it along the way as much as anybody else with just the more shorter term outlooks. We're trying to see if we get any bounces. Maybe we come up and take the highs again. But overall, looking for that region here. So assuming that we do see the strength come out of this region here, I still do anticipate seeing a move higher in Bitcoin to overall coming back up towards these high regions into this gold pocket, Flipping 115 area will really give more credence to the idea that we'd see higher. And then the region of 130 to 135 still remains my summer target. Once again, things can change if we start losing key regions down here. But until that happens, I still target that 130 to $135,000 area, potentially around the end of September of this year. All right, now, folks, the big picture here as far as ETF inflows, outflows, purchases, it's still increasing here overall, right? So when we look at all the overall ETF products here, the increase in Bitcoin that's been accumulated is still increasing here. We had a little bit of a standstill pause back in this region here, and then a slowdown really between the end of May and basically the month of June. But in this 1 month, we still are seeing over 20 million Bitcoin being added into these reserves. So the big picture, I do think, still remains relatively bullish. As I've stated before, in times where even if we look at this just as one data point, we're looking from the overall beginning of the ETFs till now, we've done nothing but see increases. But as a reminder, even like we're seeing right now, even though the ETFs are increasing and it seems like that supply and demand side should be increasing the price of Bitcoin as well, this whole journey here, we still have seen multiple pullbacks, including the pullback from 72,000 from March of last year, when we went from 72 down to 48 in the summer of last year. That was a big one here. We also have seen the drop down from 110 back to 74,000 just earlier this year. So the pullbacks can happen still, but when you look at the big picture, overall, I do still think that it is bullish and heading up to the upside. Now, we've also got fear and greed to look at here now. So the last time we looked at this, it was relatively neutral, really a little bit more into the greed side. Almost, I guess you could say, really where we're at technically is equivalent to where we were just a little bit ago, as far as we were just ticking more towards the greed side. And I think that the fear is truly a lot higher at the moment than this is really calling for, only because it's just all I see, and that's just personally just looking at the sentiment across not only people I actually know, as people immediately as soon as some of this negative news starts dropping, everybody gets really worked up and worried, and I think that you can sense that across the board. And then as price drops, of course, that's when the real fear starts to kick in. Now the stock market's not technically open. This is from 2 days ago, so it's still reading in neutral. Yeah, really nothing too crazy here from where we are. I think that honestly, looking at this, we could still, once again, it can literally go both ways here for a bit. And not that that's a great answer here. It doesn't really affect my analysis at this point. I'm just kind of pointing out where this stands. We're not necessarily at extremes yet, I guess is the best way to put it, right? When I look for those really big major reversals in the market, we look for extremes, whether it's extreme fear, extreme greed. Obviously, the chart, needs to be in some key regions as well. So this just kind of leads me to anticipate that even if we do see a little bit of an upside as we start the week off this week, overall, I do still think 88,093 is where we end up landing for Bitcoin. And that would probably cause the fear to subside into the extreme fear. Stock market, we'll take a look at the SPY here in a second on where that may end up pulling back to as well, if that's going to cause any fear there. And just take a look at where the opportunities lie here. A quick break here. I want to give a shout out to WeX, our official exchange partner here at DataDash. If you're trading crypto and not using WeX, you're missing out. They offer non-KYC access and over 640 trading pairs, and some of the deepest liquidity I've ever seen, which means smoother execution, less slippage, and faster fills. And here's the kicker. They're giving new users a 20% deposit bonus up to $30,000 in rewards just for verifying your phone and email. It's fast, it's secure, and it's built for serious traders. If you're interested, please be sure to sign up with the link down below in our description. Now let's get back to the analysis. All right, folks, the SPY, which is the ETF that's measured against the S&P 500, once again came into the target area that we've been looking for ever since basically back in March, which was a quarterly NPOC. That's an untapped point of control left over from last quarter. And you can see that's exactly where we've topped off so far at the moment. And one thing of note is that we have an untapped monthly pivot down below us. So this is the average of price from last month, likely to be met this month. To be fair, we're running out of days here in the month of June. But if we were to get a little sharp pull down to about 580, this would be, once again, something that we see time and time again each and every month, just about. This is also our 50-day moving average coming in right here as well. And then I just want to point out, if we were to lose that support, the big area I'm looking for the SPY to come down and see a little bit of big key support as well, if we were to lose this region, is between 565 and 580. Anything below there, I'm going to be looking for a Fibonacci retracement to about 556, which would come in right at our quarterly VWAP here as well. I would almost venture to really box that whole region off. I know that's a kind of a big zone here. How big is that? I mean, it's probably like just a few percent, but about 4.5%. This is the three major averages I'd look to, as well as being that this is the 0.382, which one thing I like to point out all the time when we have really strong moves up like this, a lot of times you'll start to get a sharp decline. Many will target that gold pocket, but a lot of times we may only see a shallower retracement just to the 382 before we continue higher. So this is my big area I'm looking to at the moment to see how the market is going to react. First one coming in right at 580. I'd say 565 is that secondary one at the 200-day moving average. And let's look at 556 as well. So between 556 and 580, about a $25 area. We'll finish things off with gold here. And just looking at this, I was looking at this as a potential breakout. I really wouldn't view it anymore like that as like a bull flag or anything, but still target is remaining the same to the high side at 3,600. Otherwise, if we were to see a pullback and looking for that next opportunity in gold, a big one to me is back at 2,900. Now, seeing gold drop so substantially, that'd be about 12, 13%. May not be something we see in the very near term here, but that is if I was to be building a case of where to look for the next best opportunity. It is the 200-day moving average down there as well, right around that 2,900. Otherwise, coming back to support here, which you can see is our daily EMA right there, our 50-day. That sits at about 32.83, just a few percent below where we are right now. So about 3%. Not an area where I'd be looking to get involved with gold, but just something to be aware of just to see if we pull back to local support before continuing higher. And my next real deal best entry area that I'd be looking for and getting involved and getting interested in gold would be indeed back down to this like 2,900 to 3,000. That would be a deeper correction, something that I'm more interested in looking for buying opportunities after about a 10, 12% pullback if we get it. All right, folks, that's going to do it for today's update. But if you want to stay ahead of the market with real-time setups, deeper analysis, and educational content, be sure to check out the Traders Club at data-pro.com. It's where I share all my daily trade ideas, macro outlooks, and everything I'm watching in real time, whether it's crypto, stocks, or commodities. Thank you so much for watching. I'll see you all in the next video. And until then, everybody, cheers.